All right, hello everyone, and welcome to this intraday strategy webinar on SB Trade Desk. Michael Boutros with you here this morning. Great to be here. Looks like we got a packed crowd, and AV is good according to Petro. Great, thanks for that. Yes, please, dollar CAD first. Mark, coming right up. So it's right up on the screen. I just got a tweet from someone who's not going to be able to attend the webinar. I wanted to take a look at this as well. Look, you're right up at that initial near-term bearish invalidation level we talked about in last night's piece. So the update from last night on dollar CAD, just to give you a quick gander on what that looked like. Here's what we looked like last night about 10 o'clock p.m. This was the bearish invalidation level. So obviously the rebound off of the key support, which was 24.20 to 24.32, basically took us right back into the open of the week, with these slope lines now coming into play with a 50% retracement of the entire decline. So if you stay below 25.24, the momentum signature saw a couple of failed attempts to break above 60. I'm just looking for a downside trigger here to get me going. Odds are you're not going to get that until the opening range for the U.S. markets give out. As it stands right now, the European opening range, which is what I've been looking at since the open here, or since I came on board, is right around 125, 124.95. So this is the sort of region in focus as we open up the U.S. trade session. If you push through the highs and 60 breaks in momentum, you're basically looking at a run right back up into 25.65, 25.55, this region. And then obviously the opening range has been set on a very clear Monday, Tuesday high-low. If that breaks, you're looking up right into 2026 in the trendline resistance off of the September high, or January highs, excuse me. So it's right at an inflection point here. Hopefully we'll get a trigger within the next couple of hours. Remember, a quarter of the daily ATR here is starting to widen out a little bit, so you're looking at about 30 pips per scalp. Excuse me, but the levels haven't changed from yesterday's update, guys. I've been finding the updates at night, guys, right before or an hour into the Asia Open have been a lot more beneficial as far as really being able to pinpoint the levels right ahead of time. So I hope you guys are finding that helpful as well. All right, so again, the broader picture for dollar CAD, everyone's looking at the consolidation break. Jamie also put a piece on this on Daily FX yesterday as well. We kind of both tag team this one, but the resolution of this is really what we'll be looking for. Obviously the BOC didn't really give you the volatility that you were looking for. GDP numbers were pretty strong, still not enough to really get us through the downside. Just wanted to keep highlighting this region here into 2380, 2383. There's a couple things I want to note. A, you have the confluence of this trendline resistance, which is a 3-point touch, pivot. That comes in right there, right around 2380. You have the basic trendline support, or the channel, or the triangle support. That comes in right around 2380. The low day close for February, well, where's my, no, I'm sorry about that. There it is, 2384 as my point. So there is definitely, some validity to watching that 2380 level to the downside, and that's really what's going to be the break that'll, sort of set this thing off. So we'll see what the opening range looks like. Any questions on dollar CAD? Let me just bring a 5-minute chart and see if there's any compelling triggers here, even near term. So there's one giving out right now, but it's not something I'd be working with just on account of where we are in time, just opening up that range. There's a topside trigger there. But remember, the opening range highs for Europe are still 25.30, so you're not too far off from that region. Okay. Isn't BOC in 25 minutes? At 10 o'clock. So you actually still have some time. Who was that? For Mark. It comes up at 10 o'clock. We're not really expecting much. It's going to be a 0.75% hold on interest rates. I was talking to David Song about this, my buddy, yesterday. I don't know if the forward guidance is necessarily going to be enough here for the BOC to actually affect any major move in the CAD. We'll see. They've kind of just been sitting pat and taking pace from the Fed. So 10 o'clock comes around, you get the Bank of Canada interest rate decision, guys. If there is forward guidance change, which is a little bit more leaning towards the hawkish side, look for that to be a possible catalyst to the break of the European opening range low. If that gives out, you do have that 50 there, which has been a nice pivot. But once we get out of this region here, guys, this should be a nice play right back into the lows. And then the subsequent target, like I said, 2380 is going to be pretty big. At the end of the day, we got to stick to our guns. And this is the near-term bearish invalidation level. If you do get that topside pop, expect to run into 2560. All right. Questions on the loonie? All right, so there's a piece on this on Daily FX as well with an accompanying video, but all the more important levels are all mapped out for you here. I'm going to zoom right along the first couple of setups. There's, as I said last night, there's just no love for the pound right now. You're likely going to see, things start to thin out as you head into the interest rate decisions from the BOE and the ECB. But here's what we looked at the pound yesterday. I've been adjusting the bearish invalidation level to go along with this slope range just above the 54 handle. We did make it below the near-term support, but into 53 is still really, really difficult to even take a scalp. Here's what I'm looking at on the daily, just to put things in perspective real quick, guys. The daily chart, we talked about 53.20. It is a longer dated 786. That's not really the more important point. It's the high day close or the opening range close high that we made. It's the gap on the first day of trade for the year. Former trendline support from 2009, long dated trendline support, just below it. And this is the near-term support, the weekly opening range low for the last 2 weeks in the pound. The trigger looks like it's giving out. We obviously need to see the close here to confirm that, but this will be a positive development. My problem on the scalp is, look at this. So the trigger did give out. I was watching this last night. I was about to jump in against the opening range high. Inevitably, you may have squeezed it out if you had your stop against the high, and you would have gotten to 26 pips. But on the break, I mean, an hour in, this thing still couldn't make it below 40. Still couldn't make it below 40. Then it broke the trigger to the upside. And there is just no conviction on this really giving us the downside break. At the end of the day, guys, the levels are still the same. No change. Near-term resistance was former support. It's 53.35 into 53.50, 15 pip range here. And the only big issue is going to be the 53.20, 53.10 region. So I adjusted these levels I noted in the report yesterday to take into account some more key pivots here in price on the near term. And that's what we're going to use as the break. Instead of 53.20, we'll use 53.10. That opens up a drop into 52.69. And then hopefully the lower median line parallel if we do get the continuation. Bearish invalidation remains with this slope range here. Okay, so as long as we stay below that, we'll like selling rallies in the pound. Questions on the sterling setup. Again, lackluster. Really, the plays have been on the Aussie guys. The yen play still kind of stalling out, but that's in play. Beautiful play in Kiwi yen, or Kiwi sterling key rather. I'll show you in a moment. But this is where we're at right now with the pound. Kind of struggling at this region, but looking at the daily chart, not really surprising, right? To see this kind of stall here. So once we get out the underbelly, I think you play that downside near-term bearish invalidation, 54 handle. Okay, Pravendra has a question on Sterling Oz. Okay, so let me jump into Sterling Key. I think that's like the highlighted play here, Pravendra, and then I'll definitely jump into Sterling Oz. So an interesting setup here I had written down on Sterling Key. Played out overnight. Obviously, the Kiwi got stopped out, guys, on the swing side of things on this rally here. At this point, just to take a quick segue for the Kiwi dollar, just what I'm looking at, this slope has been ridiculous with catching some major pivots in consolidation and price, and that slope takes us right to where we are right now. A basic trendline resistance. This is just a basic connecting the highs off the 2014 trendline high. Gives us a little bit more space. So I wouldn't be too surprised to see this thing travel even into 76.40. Again, if you look to the left, you're matching up with a serious range here of some key lows that you put in both in December and early January. In fact, it was the January opening range low that gave way to this drop. So we're a little bit more of a key range at this point. I think, again, we look into 76.30, the 76 handle, this region here for possible entries. But keep in mind with NFPs, again, just a couple of days away, that volatility in the dollar could kind of wreak havoc on a scalp like this. So Not something I'm necessarily, poised to go out right now, but certainly something I'll be looking at over the next 24, 48 hours as we head into NFPs. Objectively, guys, just to bring things into focus, objectively, this is your weekly open here. Objectively, this is a break of the weekly opening range. So you'd want to stay near term from a scalp bias, pretty wary of shorts while you're above 75.70. You'd need to come into a major area of resistance to really fight that. Also, on the momentum bounce here, you even got the break of the weekly opening range alongside a trigger in early European trade today. So again, that took you back above 60 after a 50 hold. A little cautious here. Let's see if we can get a little bit higher above the 76 handle. Might offer a nice entry. So where does that leave us for sterling key in combination with what we just looked at the sterling dollar? Kind of sluggish towards the low. Kiwi dollar, just making it through the highs. Look at sterling key last night. Boom. 202.80 into 203. Major key area of support and a pivot range we've been talking about for months just completely collapsed. The break there, run to a nice confluence of the 100 and 50-day moving averages. Don't really stress these too much, guys. They're just reference points, but might give us a little bit of a pause here. You also had that gap open that you made in January. Long story short, I think you're en route here back into the 200.80 region or so, just below 201. This is now the near-term bearish invalidation level, meaning as long as you hold below this region, you're looking lower. And it also, on a little bit more of a meaningful route here, represents a basic break of the weekly opening range. So you have a couple of things here telling you to go lower. First 50 break that you've seen in momentum from above 60 since here. Obviously, I'm not saying this is necessarily going to be the result, but certainly does jive well with what we're seeing in price action. The more compelling thing for this setup, guys, on the sterling key is actually the intraday chart. It's just, it's pretty ridiculous. So if you take a pretty wide zoom here, just to give you an idea of what we're in, this is the median line construct we've been in. This is from the low that you made back in November, okay? And to open up the week, you had the opening range for the week sitting right on that median line, which has already caused or charged some nice pivots in price. Okay, so here's your Sunday open. If you guys remember, we were scalping this last week with a break of the weekly opening range right into the top side. It was a beautiful setup. We invalidated the median line again. That shifted the bias to the downside with a 40 break in momentum. And then we kind of lost efficacy as we came and dilly-dallied around that lower median power line. So this is no longer really in focus. I'm going to get rid of this. Keep things clean here. These are all just has-beens, okay? Just want to show you what we're at now. So now, to open up the week, here's the Sunday open. You pushed into a high right around 205, okay? Kind of a wash for the first couple of days. A break of the weekly opening range didn't really give you much conviction to do anything here, okay, because of that key support range that we just talked about. And the daily chart is why that's important. So even though you got a trigger for the weekly opening range break yesterday, I'm not going to try to press through this on a scalp basis. If I'm holding something from a more favorable entry, that's a different ballgame. But, we sat into here for another while. You finally got that trigger break last night in early European trade. That invalidated the median line, and here we are on our merry way. So, near-term resistance at this point, if we just mirror these trend lines, guys, mirror the slope, you do some quick sliders here. There's your sliding parallel right there to govern near-term resistance. Near-term bearish invalidation is going to be right here. Okay? And as long as we stay below this region, we'll continue to favor short side of sterling key near-term. Does that make sense, guys? Downside targets, for those of you who are looking on this one, there's that 200.80 level, 200.90. Let's just call it 201 as a near-term target there for sterling key. Major key support, or the major play here for a little bit more of a substantiated pullback, is going to be right above 199. Nice confluence. My favorite setups, guys. 618 off the high, 1618 off the low, or vice versa, rather. 618 off the low, 1618 off the high. Nice region down here. Don't know if we get that far. First target's 200.90 here. And that's been actually a pretty decent pivot in price in and of itself. All right, questions on that. So Premendra, that's my favorite sterling cross if you're trying to play some of the sterling weakness against one of the com blocks. I do think take advantage of that Kiwi sting. That's sort of a nice play right there. We'll see if we can get the follow through to 208. Again, remember, we just looked at the Kiwi dollar chart, right? And that's got a little further to go, too, if it does go into that near-term resistance. So you can envision a scenario where some more Kiwi strength puts a little bit more downward pressure here to get us down there. But let's take a look at Sterling Oz for you. Here's what Sterling Oz looks like on the daily. Okay, we can start dropping our opening ranges now, a couple of days in the month. Okay, it was a beautiful trigger. I do like the break there, but I don't see anything here that compels action. And by that I mean you haven't even cleared the weekly opening range yet. You haven't really cleared any major highs or lows. Let's see what the near-term chart looks like. Sterling Oz. Okay, here's your weekly open. Let me just do this on the fly for you real quick here, Premendra. Already made it through this. It's not my preferred setup. This is what I'll say. I mean, this would probably be the better slope I'd be working with. Either way you look at it, look for near-term support just ahead of 195. That actually completes 100% extension from the decline off the highs that you made in February, which were the yearly highs. This is the first barrier of entry. It also represents this swing low. This was a radical move. In fact, it's pretty much the spreads blowing out here, guys, on the Aussie for the interest rate decision. So, I really wouldn't stress that low per se, but the bid did get that low on the release. Long story short, I'd rather play the preferred Kiwi setup just on account of where we are in price. That Kiwi support break we just made, the Sterling Kiwi support break we just made, was really big region. Right, Premendra? So I think I'd rather be a little bit more comfortable with that play. On this stance, yeah, so this is the break I would play. So the Sterling key, that's the break that we just made, is what's sort of compelling to me. The break for me here, that would put us sort of on a same stance. Yeah, it would have to be way lower from where we are right now. It would have to be like... Actually, it's right where we're approaching right now. Where is this low? Is this the February low? That's the February low. It would have to be something like this, down here. If we slip into that zone, that's where I'd be interested for either playing a little bit more of a concerted rebound to the upside before we sell again, or if we get a concerted break below that 95 region, that would be a target on the way down. Real nice pivot, form 100% extension, the highs from December, a really nice confluence region. You also have that median line there. So that might be a setup I might be interested in, Premendra. If we get continued sterling weakness, i.e. or Aussie strength, a break below 94.90 would sort of be a decent play I'd be interested in. Remember, really big scalp here, a quarter of the daily ATR, still giving you 53 pips, so you got a lot of room to play with. I would just want to see this start to ramp up a little bit more with the sterling dollar breakdown, because remember, that's at support right now. So if this continues, I do like that that possible play. Premendra, does that help? He says, thank you very much. I will wait to see that break. Very helpful. Cheers, mate. Appreciate that. All right, so little jump into the sterling crosses there, guys. That'll be the focus. Again, for the scalp, we'll want to see 53.10, 53.20 just give out. I'm not going to sit here and kind of try to front run that. I do think we're working with the right slope. We're looking for 52.70 on that break. But, ahead of BOE and this lackluster momentum, we'll just wait to see if the U.S. opening range gives us the break we're looking for. Moving right along, dollar yen, still in play, no changes here. We're looking for the break below 119.38. Remember, on Sunday night, guys, we noted that as the initial hurdle, okay? 119.38 into 46 is needed to reassert the short side. So we shouldn't have been too surprised yesterday to see a little bit of bounce off that region. It's exactly what we got. In fact, the low was 119.38 to the pip. So you got to drop into that range. You have a nice 236 basic retracement in there. Here's another sliding parallel, guys. If you match that same slope for the current operative, median line formation that we're in, and just match that up, it also gives further credence to watching this region here. End of the day, we need to get below 1938. At that point, the only thing that's in the way of 119 is the lower median line parallel for the embedded slope here. So over the last 2 days, we left the target at 119 because, or at least from a scalp perspective, there's no other targets ahead of that, just because the slope was sort of right there on that same convergence. The slope is moving higher, so just keep that in mind on the drop. You might want to, if you're scalping this, as you head into like 119.10, 119.12, just start to lighten things up. It's also the swing low from Friday and the median line right now. But there's really nothing too concerning here, guys. We'll move the broader bearish invalidation still stays up here at 120.20. The near-term bearish invalidation is going to be up at the Asia-Pac highs from last night. So break above 119.80. Expect that run back into 120, 120.20. Excuse me. Both of these targets up here. With really the break here setting off the decline that we need to get that 119 target. All right. There was a trigger here on the 30-minute. I just do want to point this out. The reason it wasn't operative was, again, because you weren't clearing any opening ranges on that move. The Asia-Pac opening range was down at 119.50. You were right mid-range. A trade like that I probably wouldn't have taken. It would have gotten you the 20 pips you needed, but I just wanted to point that out real quick. Got a little messy there in overnight. This is really the zone break we're looking for dollar yen. And I just want to see if this slope fits right. That might be another resistance trigger too. We'll watch. Okay. Questions on dollar yen. And again, the dollar yen daily, pretty clear where we are, right? There's the consolidation. Remember, we started off the week 120.20 is the bearish invalidation level. We came right into it. We've been pushing off. But again, let's see that break below 119.38. Get this thing popping. Remember also that the daily chart momentum trigger hasn't given out. It's a 4-point touch trigger line. So I do, a break below that would really assert, especially if it comes alongside a break of the lower median line parallel here. Stefan says, I just drew that RSI slope. I'm learning, my man. Great to hear. Love it. All right. So that is the dollar yen. Moving right along with the other setups that we've been highlighting on the intraday page. Aussie dollar, here's what the good old Aussie looks like. So we're pressing the near-term bearish invalidation level. If we get above 78.50, there is this trigger right here I've been watching since I woke up this morning. It looked like it was going to break on this early stretch just ahead of the webinar. It pulled back. I've been talking to you good folks since, so I haven't seen it. But listen, it's not that big of a range. It's only about 25 pips to the upside if you do get the run. The quarterly ATR is about that. But, the operative move here, if you see the break, is that trendline resistance that extends off the September highs. I'm just going to zoom this out to show you that. Right over here. Also another 3-point touch trend line off the September highs. So it might be a nice little scalp there for us, especially with the momentum signature where it is. It's pretty constructive since that break that we got yesterday, right? 40 drop, first 50 break of the week essentially. Then a run right up above 60. Pullback holds ahead of 40. If we break 60 here and push higher, would like to see this thing trying to tag that trend line. Again, the operative play here is we still let me take a step back. I'm still treating this near term as just a possible rebound here because we had that outside day reversal yesterday that we talked about in the webinar. The lows that we made on that stretch were right above the last couple of weeks' opening range lows as well. So we are looking just to play the upstretch, but there's that September trend line. Again, another area, and the close highs comes in right around 78.80. So it all kind of lines up really well with this sort of another pop into this region. Very similar to what? The Kiwi dollar we just looked at, right? A little bit more room if we do see the spread. Doesn't mean it's going to invalidate our entire bias here, but might be another opportunity to get the scalp on the other side. Mark, which one are you talking about here? The RSI trend line did break on the 30-minute. On the Aussie. Oh, it depends which one you're looking at. Were you looking at this one? This one did break. Yeah, absolutely. This broke in an early European trade. Or I'm missing the one that you're looking at, Mark. On this one, still not broken. Yeah, we're still ahead of that. We're still ahead of that right now. I don't think we want to necessitate that as a break yet. It could be. It could be. Let's bring this to a 5-minute chart. Again, it's really hard to ascertain those triggers on the 30-minute charts because you need to see that close, right? So let's see if there's anything here. Sorry, guys. It's going to look a little messy. Just bear with me. Yeah, in fact, I don't see necessarily a trigger to the south side or to the north side that's given out here. What I do see, though, is some divergence into the highs. And that's the trigger I would be using. All right, Mark? On the near-term construct, again, remember, guys, I don't do this too much in the webinars because we could go into every single currency pair like this and it would take hours. But that's sort of what I'd be looking at. So you had a quick jump here, a higher high in price action, a substantiated lower high in the oscillator, and this is a much more concrete trigger break. You got 4 tags here. So on a downside move here, I still need to see a break of the U.S. opening range low before I get comfortable with it. So if you're using the 730, 830 slot, you have a nice range already. But that would be a compelling trigger, for example, on the downside break against the highs to hold this range. For a topside break after this kind of divergence, you'd need to see the opening range break give out and then that trigger give out. Mark, does that make sense? He says, yes, thanks to you, exclamation point. Okay, cool. Yeah, the 30-minute triggers, guys, they're there for your benefit just to be able to watch out the trade as you go through it. But if you're when you're actually going to click buy or sell, you're going to need to zoom in. You're going to need to zoom in because these are all, guys, all oscillators are very, very delayed. They're backwards looking and they're only taking into account the close. So I want to get a picture of what closer price action is doing. So Stefan says, do you always use a 5-minute RSI close for your trigger? Yeah, pretty much I would have to say, Stefan, that's the norm. I mean, if the trigger is giving out and the momentum is behind it, I'm not necessarily going to have to wait for the 5-minute if the setup is there. So, Stefan, let's say you're making it through the opening range high for Europe, the 5-minute trigger is giving out. You know, on that type of thing, you kind of just got to feel it out. But, yeah, I would be looking to use the 5-minute trigger on those entries. The 30-minute is what I'll watch when I'm in the trade. So once I'm in it, if a 30 trigger gives out, you know, that's my either signal to jump out of the trade or, you know, start to take some off the table, bring my stops down. Good questions today, guys. Mark and Stefan, is that crystal clear? I just want to make sure we're all on the same page there. Stefan says, got it, thanks. But you start longer term looking at the 30. Right, Stefan. So the 30 for me, it tells me just the right amount of information I need, where I'm not using an hourly or 2-hour chart that's masking intraday price action. And I'm not just looking at a 5-minute chart that really, again, makes me oblivious to the larger scope of the picture. It's just a preference thing. But for the actual buy, sell on a day-to-day basis, yeah, you got to be looking tighter time frame than the 30. Good question. Mark says, A-okay. Stefan says, right on. Love the enthusiasm. Great. All right. So we'll watch the Aussie here, 78.50 near-term resistance and the near-term bearish invalidation level, a topside break. Like I said, we'll look for that September trend line on the upside. Last but not least, we went over the dollar CAD setup, so we'll go over euro, and then we'll jump into the gold trade real quick. There's also a pretty interesting setup on copper that I wrote yesterday. Actually, it was featured on cfdtrading.com, but we'll take a look at that. First things first, here's what the euro dollar looks like. So, stuck between trend lines is what I wrote yesterday, and it's sort of been a clean structure, but very sloppy intraday. So here's what the last couple of weeks look like for the euro, guys. The median lines here have been, I think you would agree, very, very well respected by price action. With this construct here, catching the three highs, lows, pivot, almost just like textbook. So, excuse me, sliding parallel of that slope has been catching the lows here. We did get the break last night on a trigger. Okay, again, I can't help this, guys, but all of these setups are panning out in Europe. If you're living in Europe or if you're trading Asia Pac, you guys have the cream of the crop of like 80% of the setups I've been putting out. They've just all been panning out, on either the Asia Open or the Asia Euro cross. So here's a perfect thing right on the Europe cross. A break of not only the U.S. opening range low, but the weekly opening range low. That was 11.50. You're looking for about 26 pips. You ground it out just above 111. Okay, so definitely a feasible scalp if you were up. The major area of support, do not forget, again, we talked about this in Monday's webinar for like an hour, is 1096. Don't forget that level, guys. It's not just the low. It is the longer-term 100% extension from the decline off of the highs that you made in 2000. Excuse me, lose my voice here. In 2011. So a really big region of support, huge Fibonacci significance, and the 2015 opening range low. I mean, it doesn't get more critical than that. So I'm not against taking the shorts, guys, now that the opening range is broken. I'm not against taking the triggers. I just want to curb your expectations heading into 1095. A break below this level, you're likely to see this thing gather some pace, but we could find some support there. If not, see a little bit more of a full-on bounce from that region. So on the short side of Euro 1096, don't forget it. That's the major key area of support. On the intraday, you also have the lower median power line for the current construct just below that. So 1065, 1095, nice 30 pip range there, which also carries the lows. All right. So near-term resistance is this highlighted region, the former opening range low for the week. That's 111.55. Just going to highlight that for you. The bearish invalidation level is still going to be this region right here. If we make it out of this sort of sloping channel between these two lines, then you look to play the recovery back into 113. But as long as you stay below this, we'll continue to favor selling shorts or selling rallies in euro. All right. Questions on the euro dollar. Obviously, ECB on tap tomorrow. That's going to be the main event. You follow it up with a nice kicker on Friday with a non-farm payroll print. Likely to see some nice volatility. I know it's been a little bit quiet for the week here, guys, but this is, very typical of pre-event risk. And we're not just talking about any event risk. We're talking about something that's a little bit more critical, as we're supposed to see the ECB really start to embark on something a little bit more of on a grander measure. So we'll see. Sandy, good to see you in the room, says, I closed DAX long yesterday as a bear candle closed under the 30-minute EMA and went short. I took profit on the DAX at 11,200 and C. Very nice, Sandy. I was actually thinking about you yesterday when I looked at the DAX. So Sandy brought up a DAX question yesterday. She was holding a nice long position. We had highlighted a region of support yesterday. This is a 30-minute chart. We had highlighted a region of support yesterday that we said, listen, she was in from last week. Break below 11,363, you're likely going to want to bail on that position. I think that's exactly what you did, Sandy. So she says you were right about the new high and corrections. Again, it's not me being right, Sandy. I appreciate that. I'm just highlighting the levels, guys. You guys are the ones taking the trade. So the opening range break for the week, the opening range break for the month, sub 11,363 also coincided with a basic 3-point touch trend line. And obviously that invalidated the long side near term. So Good foresight on that one, Sandy. Well done. Well done. Um, and you went short and took it out at 11,200. Wow. Nice play. Nice play. Perfect. Well done. So on the near-term approach here, now that we've seen and substantiated a near-term correction, a couple of retracements or levels you might want to just keep for your consideration. If we take into account the February low here, that even highlights that 236. Okay, so I'd highlight this region instead. Again, we don't want to just blindly find the fibs, guys. If there's highs or lows that the market has substantiated, we're always going to take that. Whoops. We're always going to take that into account with a little bit more water. There's a little cushion area of support there. No, I might be getting a little overzealous on that. Okay, so just a quick look here on the fly for more stuff here for you, Sandy. The formation that we're breaking here in blue is actually pretty big. Just kind of looking at this, this is off the lows from December essentially, so it's taking into account the 2015 range so far. We know we haven't seen a break of this yet, except for that one drop there early in January. But point being, a sliding parallel off that low highlights the same region we just kind of put into play here with that 38.2, right above 11,014. So on a close, on a push lower, your bearish invalidation level, by the way, is same support structure that we invalidated alongside with yesterday. So as long as price stays below 11,363, you look for an inevitable drop into this region, and that sliding parallel should also offer some support. Let's just see what a quick retracement of this also looks like. See if we complete anything on this pullback. Yeah, so you may even completed 50% already. Oh, and look where the 6 comes in. That's awesome. That's awesome. All right, so just this. So 50% of the retracement's already been made with this pullback here. We just missed it, actually. You could still see another blip higher. The bearish invalidation level, well, it's the opening range low for the month, for the week, 11,363, 362. Looks pretty good, Sandy. Your trend line coincides with the 30 EMA. Yesterday also is the daily range breakout. Your level is at the weekly S1 and the monthly pivot right on. That's awesome. Further validation, right, guys? It's all about just getting as many techs stacked up in favor of your thesis as possible. And that's really how you should be ascertaining, the size of the trade that you're making. But not bad for the German DAX. Nice setup. So while we're here on my equities charts here, I do want to also take a look at a copper position, or a setup rather, that is featured again on CFD Trading. If you guys visit that site, for those of you who are trading the CFDs, if I can find my copper chart, oh, there it is. You'll see this chart on there today. So the basic play here, guys, is very similar to what you're seeing in gold, although I think the gold setup is 1,000 times cleaner. But in any event, the whole point, or the setup here, is the support barrier into 261.50, this region here. So this was the initial opening range high for February. It's a basic 236 of the decline off the highs from July. It is, the convergence of this is a lot. You also have this median line construct off the highs from 2013. Excuse me. That comes in there, has already been tagged as support and checked. 100% extension. Oops. From the ascent off the lows brings us into 264.80. And this padded area of support is going to be the near-term bullish invalidation level. Okay. Remember, this thing turned constructive with this outside reversal candle that we made on the 24th, which inevitably pushed through that region and then went right into the median line. So on the pullback here, the play is essentially going to be the March opening range. And as long as the March opening range stays above 261.50, this region here, as long as we stay above that and the momentum support trigger holds, a topside break, you're looking for this confluence region here about 279. That's if we hold this structure, and that's the opening range setup for March. So right now, all you have is you're defending against this low. If you break below 261.50, you look to play the recovery. The lows that you made here, right at 253, actually completes an exact 618 retracement of the advance. Okay, I can actually just show you. I don't even have to take my word for it. Whoops. So if we take a basic retracement of the advance, there's a 618 retracement. Okay, so on a downside break, that would be your initial target, that low 618 confluence. On a topside breach of the weekly, monthly opening range / 2014 low, okay, you're looking for that rallying to 279. So I think it's a very compelling setup. I do think the momentum signature on this one will speak to us specifically because of where we are. So if we see a 60 break in momentum, guys, that would be the first 60 break in momentum that we've seen since June. Okay? And that was after a 50 break, or a 40 hold rather. So this is coming from oversold. That 60 would be even more significant on a topside push. So something to keep an eye out. If you're trading CFD, is also a beautiful setup here on copper. A look at crude. I'm not sure who was here in the room yesterday, guys. As I was closing out the room, I saw I had missed a question on crude. Here's what oil looks like so far. The same exact setup. Again, I keep saying that on some of these, but specifically on the commodity block here. Guys, we're still in the February opening range. Still. Okay? It's like pulling teeth with this thing, but it's a range trader's dream. So, sub 54 shorts are favored, above 47 longs are favored. Use the triggers to your advantage. The objective or the base case scenario, if you take this out to a daily chart real quick, the base case scenario, guys, that you see another break and push into the 54 region, which would test this median line depending on where we are in time, and maybe even a pop into 58 if the dollar corrects. So I'm going to take you back real quick to the Dow Jones FXCM dollar index. We've been watching this one for a while, right? Same regions in play as well here. So the near-term resistance and bearish invalidation is 11,854 to 11,880. And then remember the sliding parallel we've been talking about for a couple weeks now. That's support. So on the downside break there, I do think you can finally get that topside pop in crude. But that being said, the levels to beat are pretty clear. Oops. Let's do a 2-hour chart here. All right, so the March and the weekly opening range is pretty clear-cut and set. You're testing that resistance right now at 50.96. If you see a topside break, your initial target is right at that median line, which has been charging some nice reversals here as well. And then obviously the key resistance is 154, 153.95. And that's the topside break. That would inevitably put us a little bit more of a longer stretch into the objective at 58. Near-term bullish invalidation hasn't changed, 47.75 into 47. And here are some updated triggers for you guys as well. So that is a quick look at crude. All right. So those are the setups I've been following, guys, and that's what is featured on the intraday page. I want to jump into your questions. If you guys have any pairs or setups you want to look at, do feel free to throw those out. DB says euro at the lows. Right on. 1095 on tap, guys. Remember, major key support. Okay, there's the daily. There's the 30-minute. Aussie dollar, a nice reversal. We were just talking about this trigger, and if we jump into the 5-minute, guys, I guarantee you, as we were talking together here, that just gave out. Gosh darn it. It's fine. There's the support trigger, guys. So you're looking for a push through the opening range low for Europe. The opening range low for US. If we use a 730, 830 sort of span, this is going to be your opening range low here. If we get back below this, again, you look for a push back into the bearish, or bullish rather, invalidation zone, which is just into the 78 handle right here. It's 10 pip range. But again, divergence to a trigger break, like I said, 9 times out of 10 I'll favor that setup. Your stops here should be just above the highs at 78.50. The dollar yen is probably seeing something on this move here too. Okay, remember here the operative is still going to be for a push. There it is. Sorry, my lines just had to snap. The operative play here is still going to be for a push below this 1938 level. So that's the focus for the dollar yen setup to continue. Honestly, guys, if you get a 40 break in momentum, I think that's going to be the conviction you need, because don't forget the weekly opening range is just a hair above that, the opening range low. So if we get through this, look to play that 119 target or that trendline support, median line support there. Cable also breaking, says DB. Are we finally going to get the move, Mr. Cable? All right, 153.10. That's the major support level that we're talking about. We're trying to get through. Not much of a trigger. Not much of a trigger, and I'm not going to get faked out in the pound here. So I'm going to stay off the pound for now, guys, just because, again, the daily chart. It's just a whole region of support. So not really going to be my favorite setup. I'm going to be watching for the euro for reaction at 110.95. I'm going to be watching the dollar yen for the push below 119.38. Those are going to be the sort of major plays I'm looking for right now. I also do want to track sterling key as it gets closer to the target down here too. All right, sterling key at the lows. That's good too. We're back in oversold territory. Awesome. So remember this one, the target. I mean, the level, actually the 50 is at 20087, guys, but I'm quite willing to get out at 209, 2010 here. That swing low just above it, and it's a psychological barrier, so it might be worth it just to play the prudence on this one. Sterling yen, another one I just wanted to touch on briefly. I know we haven't really talked about this one for a while, ever since it went to range central last week. But this is the break of the support range that we were looking for that entire week after the rejection with the hold above 184.26, which was technically our near-term bearish invalidation level, guys. We popped through that, came below it, popped through it. So I kind of let this one go to start the week, highlighting this region as our near-term bullish invalidation level. Well, we broke below it, and here's the continuation lower. At this point, you do want to just adjust the retracement to take into account the new high. And that puts the 236 within sight, pretty close by here. Yeah. Okay, 82.76 into 82.60. This region right here. It's your first area of support. Too messy for my liking. Probably better off taking a wider stance, something like this. Yeah, that might be a better touch. break, touch, resistance, resistance, resistance. That might be a better scope. So we'll see if that offers some guidance to price action here. It's not going to be any good either. It's going to be hard to get a long side trigger to take you out of the position if you're holding shorts, guys. But just watch this region, sterling yen rather, 82.76 into 82.60. Nice padded region, which has offered some nice lows. And that is sterling yen. All right, so guys, if there are no other questions, we will go ahead and wrap that out here. If you do have anything else you want to look at, feel free to throw it on the message board. Remember, for the docket, again, tomorrow, obviously at 10 o'clock today, in just about half an hour, we're going to get the BOC interest rate decision. Again, I don't really expect anything too major. The forward guidance is going to be the only variable here. We're not expecting any change to policy or the benchmark interest rate. Remember, the near-term bearish invalidation level still remains 125.24 as we open up the U.S. session here. With a favored short side bias, basically, while we're still within the confines of this triangle formation. Dollar yen, watch that 1938 level to the downside to finally give out to open up 119. And obviously heading to tomorrow, guys, we got the BOE, we got the ECB. We will have a live session at 8:30 tomorrow, so we'll sort of be right there in the mix as Mario Draghi gets on the horn. We'll try to see if he offers any volatility. Euro right at 110.95 is going to be the major key support here near term. So watch your appetite for the south side of the euro while above 110.95. Guys, I leave you there. Have a great session. Best of luck trading, and I'll see you all bright and early tomorrow morning, 8:30 Eastern, for another intraday strategy session. Cheers.